So here with his thoughts on just what's ahead for the financial services industry and where the biggest risks may still be is Dino Kos. He's managing director at Portales Partners, formerly also the head of markets at the New York Fed. Thank you so much for coming in studio and joining us this morning.
Good morning.
5 more failures of banks over this weekend. How far are we through this process?
We're probably still in the early innings. There's a bit over 100 banks that have failed this year now, and we probably maybe have another 300 to go over the next several years. So there's a little bit more to go.
So next several. So you're looking another 2 years out, still going through this flushing out process?
Yeah, if we think back to the late 1980s, we were closing down about 200 banks per year. Now, there were more banks back then, but still, if you resize it and think a reasonable estimate of losses, another 300 should be a reasonable estimate. It may be more, maybe less, but that's a benchmark.
Well, over this weekend at the G20 meetings, there was some disagreement over just how much or how banks would pay for their own failures going forward. And Gordon Brown took some heat for proposing this Tobin tax, as we talked about, particularly from Treasury Secretary Geithner. How should we set this up going forward?
Well, Tobin taxes have been around for a while. At least the idea has been around for several decades. It's very, very difficult to implement, very, very difficult to construct, very, very difficult to enforce. And so even if you think that it's a good idea in theory, there's a lot of practical issues that one confronts. So I think where we're going to end up is a more traditional way. That is, in the U.S., banks have covered the cost of bank failures, as it were, through FDIC assessments. And you've already seen that, where we've had a special assessment by the FDIC earlier this year. There'll probably be more either special assessments or prepayments or some other ways that are constructed that banks will ultimately pay. But I don't know that Tobin taxes are. It's an idea that sounds nice, but the practicalities are just too difficult.
I mean, is it better then to have an insurance fee based on level of risk that the bank has, or one of the other ideas floated by Gordon Brown was forcing banks to create a pool to finance future bailouts? Those are all things that I'm sure will be looked at. I mean, I don't know that the mechanics are as important as who ultimately pays. If the banks pay, then I'm not sure that that the important part is exactly the mechanism. In the late 1980s, when the S&Ls had their troubles here, ultimately the taxpayer wrote a rather sizable check to cover the cost. So I think. So you're saying, regardless, that is going to be who's paying?
Well, the banks, the politicians want to make sure that the banks are paying and not the taxpayer.
Right.
So that's the goal. And whether it's Plan A or Plan B, I don't know that it's as important as who does the paying. And the politicians seem to be saying the banks will have to pay. We'll see whether that ends up being the case.
We did know, you referenced the FDIC. We do know that the FDIC is now not going to be allowing banks to pay more than almost 3/4 of a percentage point above average. Those weak banks because they're trying to sort of protect the cost structure there from going up. I mean, how much of a danger is this? Is this forcing more failures?
Well, what you're referring to, of course, is that some of the weak banks offer very high levels of deposit rates to attract deposits. Now,
they have to.
Right, to stay alive, but that has a perverse effect on the other banks in their area because it forces funding costs up for those other banks as well. And that's one thing that the FDIC, of course, doesn't want to do, is to, as it were, reinforce that kind of perverse impact on that. So they're going to be capping the amounts that the weaker banks can offer to attract deposits. But those banks probably will fail in any case.
Okay. So you're saying really no true impact because you were already including them in that 300 projection you have.
Exactly.
All right. Thank you so much, Dino Kos, for joining us here in studio.